Welcome to TheoTrade. This is Don Kaufman. Here we are. It's October 23rd, 2017, doing the Theo Night video with just about 7 minutes to go in the cash trading session. The S&Ps right now are down 12, Nasdaq Futures down about 50 handles. So we're seeing a little bit of a sell-off here. But the question to ask, all right, listen, we've had umpteen number of up trading days, and you don't have to go too far to look at either the S&Ps or the Nasdaq or even the Dow, which is, flying from 22,000 to 23,000, one of the shortest spans ever. I mean, 1,000-point move in one of the shortest spans ever recorded. You don't have to look too far, to state the obvious here. We had, again, and are going to have, ultimately, a down trading session. But again, does that fundamentally change anything about the markets? Like, do I see anything that says, like, all right, here we go, we're going to see some sell side activity over here? And quite frankly, the answer is no. We haven't actually seen yet a kind of fundamental shift. I think a lot of people are probably, looking for me to possibly say that. I've been bearish for quite some time out here, but let me elaborate upon this for just a moment. A few of the things I look at, so the S&P futures, right? I mean, that's kind of your staple in the marketplace. You look at the S&P futures because they drive order flow ultimately to the entire marketplace. The Nasdaq futures have had incredible importance, though, as of late, because the Nasdaq's been one of the biggest driving forces. On a percentage basis, we're not even talking about a 1% down move. I mean, we're almost shocked at this point that we're going to even have we're allowed to have a down day? I didn't even know this was possible. I mean, that's how routine some of the, upward bias has ultimately been. And that starts to get scary because, again, you just get lured into this idea that every day is going to be an up day. But let me show you why things haven't necessarily or fundamentally changed. One of the things I also look at, so I look at the S&Ps, look at the Nasdaq, sure, we look at volatility, we look at bonds. Guess what? Bonds haven't done anything. Look at something like the advanced decline line. Now, I'm looking at the advanced decline line specifically here of the S&P 100 because it represents, listen, that's what matters. It represents what matters. There's like 10 stocks in the S&P 100, okay, that account for just this monstrous amount of market cap. So we don't have to look at the full S&P 500. Look at the S&P 100. It's the advanced decline line, okay? We're not seeing any correlation whatsoever. And what that's indicative of, all right, some limited sell side activity. Now, we can start to point the finger. When I say nothing has really fundamentally changed, we can start pointing fingers. What is really getting whacked back today? And what's getting hit are some of the monsters of tech. Facebook's down 2%. Google, okay, Google's ultimately right there with it. Again, we're talking about Google. It also has earnings coming out, this week. The implied volatility, it's similar to some of the previous earnings announcements. But again, Google down about 2%. Amazon also with earnings coming up, taking a little bit of a hit, down also in this neighborhood of about 1.8%. But on the flip side, we had Apple relatively strong most of the trading day. Apple fading is what really caused the Nasdaq to kind of come off. But as I was saying, and again, I want to just continue to reiterate, this is just, again, one down day, one rather minute down day where we're not getting this full-blown correlation. I mean, things would be different. And this one of the things you really want to key into right now. It's not just about volatility being up. Okay, volatility being up in effect is, well, because the market's down over here. But you're going to come in to trade one day, or you're going to look at this as an investor. Now, again, traders and investors alike, if you really want to know, is this marketplace poised to start to sell off? And the answer, I think, is going to come a wildly strong and or weak advanced decline line. Again, when you start seeing full-blown correlation, and what that really starts to amount to, let's say, for example, and I think this is of critical importance literally to tomorrow's trading session. Let's say we come in tomorrow, okay, and we have 85 plus decliners. that's a little bit more serious. Real full-blown correlation, okay, really starts in that neighborhood of about 92, okay, to about 95 stocks down inside of the S&P 100. Again, when you start getting 85, stocks that are down in a day, all right, what it's telling you is that there's an asset flush going on, that nobody cares, that they're selling indiscriminately. Today, well, they are discriminating today. They're going after Google, they're going after Amazon, they're going after Facebook. As I showed you, Netflix is not even a larger market cap, large enough, I should say, to really warrant any detailed discussion. Now, another aspect that I want to bring to light over here is that the financials today, okay, the financials, are they down? No. I mean, listen, 0.17% doesn't even constitute a down day. These things are hanging tough. The volatility isn't doing much of anything out here. Okay. Surprisingly, the volatility in the financials is low relative to what I would believe it would be. The reason I think the volatility in the financials should be a little bit higher, well, they might be replacing Yellen maybe this week, next week. We just don't know. I mean, that's a big question mark for financials. The chairman, of the Fed possibly being, replaced. And I would put those odds up there as high as probably 50-50, whether, Yellen takes that chair and continues on in the February term, or whether she is replaced by a new Fed chairperson. And again, we'll see how that plays out. But it's also one of the reasons I don't think the XLF knows precisely what to do. If there's going to be a bit of a sell-off over here, you're going to need the financials, okay, to play into that. This is not going to be a tech-only sell-off. On the flip side over here, I have to bring this up, and it just begs the question over here, what is in Walmart that everybody seems or needs to have as an investor and or a trader? We talk about like momentum stocks bursting to the upside. People, this is Walmart. And I recognize that Walmart, they're just not going to stand there and take a beating from Amazon, right? They're getting into the online business. Sure, the online business, great, that accounts for some upside, but it's Walmart. They are a slow-moving animal. If you've ever worked at a large company, there's the closing bell. If you've ever worked at any large companies, you know that nothing they do is going to be, fast, cohesive moves. It's like turning the Titanic over there. And yet, Walmart's up like, almost 30% on a year-to-date basis. This most recent run here, that's a straight shot, almost 17%. And again, it's Walmart. You have to question, is this because possibly a defensive position? I realize, again, they're getting into online business. They announced a $60 billion stock buyback. Hey, that's past news. At this point, this is quantitative traders just jumping in there and ultimately buying it. All right. To kind of complete a few thoughts over here, we've got to talk for just a moment about the fact that, yes, the marketplace had a relatively small down day, but this thought wouldn't be complete with, hey, what happens if tomorrow we continued to slide to the downside? At some point, every investor, every trader, okay, is going to start to look at markets as early as tomorrow or maybe even Wednesday. If we continue any of this downward motion, right, we have all seen the incremental gains that the market has been making. Many of us have said, like, hey, it's just not sustainable. And one of the fears I think that you have to have, and again, this goes much more to the psychology of the marketplace, but one of the fears you have to have after 1 or 2 or maybe 3 down days, that's when everybody start to jump in there and hit the trigger. And I'll remind you, there's only one door and an extraordinarily crowded trade. If you're not familiar with some of that terminology over there, when there's one door, the one door says sell on it. When you want to know what a crowded trade is, it's a marketplace, okay, that if you look at has exploded by what in terms of percentages? This is the S&P 500, just back to late August, okay, exploding in the neighborhood of 7-8%. Whether it's the Dow, whether it's the S&P, whether it's the Nasdaq, all having explosive returns, okay? when the sell side activity does kick in, at what point does the marketplace start to look for that door and everybody ultimately rushes for it? Thanks everybody for joining us at TheoTrade. Have a wonderful evening. Bye-bye.